Tom, talk me through your return to profit here and your outlook for building on that in the future.
Sure. Thank you. Good morning, first of all. Yeah, orders up 20%, revenue up 10%. SG&A is down, both absolute and as a percentage, and therefore, of course, profits are up. And I think the top line shows that earnings momentum is established and that we're on the way to delivering on our 2020 strategy.
Tom, let me ask you a quick question about the kind of big news story over the last few days in financial markets, and that is the decline that we've seen in Turkey, the big move that we've seen in the Turkish lira in particular. What exposure do you have to Turkey, projects in Turkey right now that may be affected, if any?
Right now, currently zero. We are in talks with customers in Turkey, potential customers, and of course developments will drive those discussions, but right now our exposure is zero.
Let me ask what your concerns are as far as trade is concerned, because we do see escalation ahead. It doesn't seem like there's any kind of reduction in the trade concerns. So, what would you see on the forefront for Bilfinger that could concern you?
Well, I think, on the whole, we're kind of late cycle, right? So, as the oil price picks up, that's good for us. Customers prop up the balance sheets, that's good for us. We still see a lot of projects, so our kind of projects are not turned on or off overnight. Likewise, our maintenance contracts are multi-year contracts, so we tend to be more stable, less subject to the political volatility that we're seeing in Turkey and, of course, also in Iran. Those kind of things we see coming. Our exposure in Turkey is close to zero. In Iran, we're winding down our exposure, so it wasn't large to begin with. We'll be out of Iran by the end of October. So I think the good news is that the kind of businesses we're in, industrial process businesses in Europe, in the Middle East, and North America, they are stable and they continue to drive our orders and hence our strategy.
Tom, it almost sounds like what you're pointing to is a better 2019 than 2018. And 2018's, the environment for you sounds like it's looking pretty stable, as you've just described. But you talk about kind of things being late cycle, you talk about the oil price, you talk about a bunch of factors which sound like you're pointing to better days ahead. Can I read it that way?
Yes, absolutely. We gave a four-year outlook in 2017. We're well on the way to delivering on that plan, and when you look at our order intake, we're 20% up on the order side. Those orders will take 6 to 12 months to materialize in terms of revenue and profit. So we have good visibility going forward, and exactly as you state, we're pretty confident on 2019.
Tom, I want to shift subjects just a bit. One of the things I noticed when I first moved back to Germany about a year and a half ago was that for such an seemingly enlightened culture, there was very little gender diversity as far as companies and boards especially were concerned. You've recently put a female, Christina Johansson, in the finance chief's office there. Do you see a need for more diversity in German boardrooms? Does it strike you as well?
I think Germany's moving, but compared to, let's say, the Scandinavian environment, or even I would say in the UK, Germany has been behind, but catching up. We ourselves are very happy to have the opportunity to bring in a good CFO. The gender is kind of that's a nice extra, but I can say that we had three very strong candidates. One was a lady, Christina, two were gentlemen, and we're very happy with our choice on the basis of CFO attributes. And then the gender thing is kind of nice to have. But to answer your question directly, yes, I think Germany has been slow, but is catching up pretty quickly.